You are listening to ChartingWealth.com for Friday the 9th of December 2016. Markets up again. How do you like the way we are calling it? Very nice to see the December effect in full play when we look at IYY, the Total Market Index Fund. We see that we have a kink up in our PPO as it continues to move higher. It is interesting to note that the derivative oscillator continues to stay about the same. It is not going up at the extent that the price change is going up. We had that candle that started drawing yesterday in today on the 2-day chart on the 8th of December as we go into tomorrow, Friday the 9th. What do we see going on? Well, we've got a nice big candle. And if we look on our 4-hour or half day, what we call our short chart, we see that we had an opportunity to jump in the markets over the course of the 7th. That was Wednesday. Hopefully you were listening, paying attention, and jumped in. What have we seen happen? Well, we've seen the markets continue to move up through the course of Thursday, both in the morning and then in the afternoon, up 0.29%. Now we are looking at the type of charts we use, the Heiken Ashi candlesticks. The average pace continues to increase. And of course, like we said earlier, the PPO continues to angle upwards, which is nice to see as far as that movement goes, both in the 2-day chart and on the 4-hour chart. And we see the derivative oscillator continuing to gain energy on that shorter chart. Remember, our trading methods are very simple. We simply wait for the 4-hour chart to pull back in the opposite direction of what our two bigger charts, the 2-day and the weekly chart, are showing. And then once it crosses back over, going in the same direction of those big charts, we find a jumping in point and we ride that trend. It is called trend following. And we try to be the masters of that. We want you to practice with us every day. If you don't have our daily market worksheet and are not using it on a daily basis, that's what this 10 minutes is for you to fill that out and use it. How do you get that? The layout that we use at freestockcharts.com, the operative word there being free. Want to make this as available to everyone as possible. Knowledge is power and a lot of money too. And in addition to that, you get our 15-minute How to Read a Stock Chart video. All three of those things by just signing up at chartingwealth.com for our daily podcast. 10 minutes a day is all we ask. Okay, let's keep pushing through our 3 indexes and gold. We're going back to the 2-day chart. Going to the S&P 500 is depicted by SPY, the exchange-traded fund run by spiders. It tracks the S&P 500. It too has had another up day, 0.24%. And of course, we had the market crossover going up back on the 10th of November. We've seen nice, strong movement following the election. When I say crossover, that's when the PPO crossed over. Actually, the market started moving up on election day and moved up pretty much the whole time until we had a bit of a pullback on the 2-day charts ending on the 30th of November and the 2nd of December. Then the upward movement started again. We're above the 2-day trend line, well above the weekly trend line. Now let's look at the 4-hour chart again. The chart for the S&P 500 and IYY, the total market, looked very similar during this time period. We had the crossover back on the 7th going up. Hopefully you were paying attention. You were forewarned. If you were listening to this podcast, you jumped in and have been riding that gravy train as it goes up with one of your virtual trades. Remember, we're not a stock calling service. We're an education firm. I want you to practice with us, get really good. When you can start doing this on a daily basis and your charting abilities are prescient, then and only then can you make your own decisions about how to make money, and that is make your fortune, hopefully. So we'll continue to watch as these markets track. Again, we want you to be with us every day helping follow all this. Now, we're back to the 2-day chart. We're going to go over to the Qs. That is the NASDAQ 100 up 0.19% for the day, trying to cross back over, going up on the 2-day chart. And again, what we've seen is some confusion as far as the charts go in the last few days, starting on the crossover going down on the 2nd, and then the crossover back going up on the 16th. do not forget the weekly chart is still in a downtrend on the Qs. And when we have the weekly going in one direction, the 2-day in another, it doesn't make for very much confidence in finding a good trend to trade. Now, that means that we just wait. We're not traders we're not on the exchange. We aren't market makers. We don't have to trade every day. So we wait until we get recognizable patterns. What do we see going on the short chart? We see it crossing over, going up on the afternoon of Wednesday the 7th, just like we saw on our other two charts, our other two indexes, and continue to move up, like we said, 0.19%. So we're leaving the Qs alone right now, waiting for it to settle out for the 2-day and the weekly to be moving in the same direction, then a pullback on the short chart. Then once it moves back in the direction of the big charts, that's when we jump in. Might be a while till that happens again. We'll just wait and see. Patience, my friends, patience. Okay, lastly, we're going to go to gold. What's going on with gold? Gold is down on both the weekly and the 2-day chart. It is losing some downward momentum as far as the 2-day chart goes. We can see that the PPO is pretty much running parallel as the signal line is coming down to meet it. Gold was down 0.22% for the day, although the 2-day candle basically shows a green spinning top for gold. So some indecision there as to whether or not it has bottomed out. Let's look at the 4-hour chart. What's it showing us? It's trying to cross over going up. Now again, remember, both of your big charts are going down. Gold has lost a lot of the luster that we had being able to count on that 4-hour chart as a total chart, trading and everything, and it has not been working. Just like it started failing at the end of 2015, it started doing the same at the end of 2016, so we'll wait until that starts working again. Again, you can use the old time-tested true method if indeed gold rocks over and starts moving back down again, crosses over going down on the 4-hour chart. You can sure practice an inverse trade, that is buying an inverse gold fund, where it goes up as gold goes down. That is where we are as we end the day on Thursday, as we go into Friday, the 9th of December. Hope that you've had a good week, that you jumped into either the total market or the S&P 500 trade when it made itself available on your virtual trading, and that you are seeing some returns there. Continue to pay close attention. Don't forget, tomorrow we'll do our comprehensive weekly review and forecast. We'll be doing that over the weekend for you. We appreciate you being with us. You have questions, problems, concerns, let us hear from you. We so appreciate all of the good things that we hear from you. If you appreciate what we do, we ask you to do 2 things for us. First, go to our iTunes and subscribe to our podcast. Give us a 5-star rating. You guys in the past have made us up high as number 6 in the world for stock market podcasts, and we so appreciate that. Additionally, go to YouTube and subscribe to our channel. And of course, if you don't already have the 3 bonuses that we offer for you signing up for our newsletter at chartingwealth.com, by all means, go there and sign up. You'll get delivered to your email box every day the market is open our daily review and our comprehensive weekly review and forecast. Thanks so much. God bless from chartingwealth.com.